We make of what he said, right? Surprised if the market goes up a lot, looking for a recession by the end of the year, 10% cash.
I kind of agree with him on a couple of different things. So first and foremost, I agree with him that parts of the market are frothy and expensive. And we've talked about that. That is growth in general, right? It's also stay-at-home beneficiaries in technology, staples, utilities. On the flip side, there are parts of the market that are not expensive. He highlighted energy and financials. I couldn't agree more with him. I also thought it was interesting that he said this is a market of stocks, meaning it's a stock picker's market. And I absolutely agree with him there. And I know you and I are probably going to talk about some of the moves that I have been making this week alone, because I do think there are opportunities in the downdraft. And then he also talked about lack of confidence in the markets overall. And that's what's putting pressure overall on the markets. Right. So, yeah, for sure, there are a lot of unknowns. We know Fed, we know higher rates, we know economy slowing, we know earnings. In my opinion, though, it's not all gloom and doom. It's not all negative. We have the dollar's down 9%. That's going to help multinationals. Input costs are definitely falling. Rents are starting to ease a little bit. We have to keep an eye on wages, but that's the good part of the economy, jobs, right? And that means consumers hanging in. And oh, by the way, wild card, China reopening. So who knows if that is going to happen, but it's not all negative. And so that's why it is a market of stocks, and you have to take advantage of the winners when everybody's looking for, this is such a negative type of environment.
He did kind of, temper expectations, though, for, the bigger picture, if you will, for stocks based on what we've witnessed over the last, few years, the amount of money in the system and what that has all led to. Let's listen to what he said about his view overall of the market now and going forward.
Sure. Anybody looking for a new bull market anytime soon is looking the wrong way. We have had the most speculative period in our financial history, SPACs, crypto, weekly, daily options, crazy valuations of the would-be FANGs, and going into a new bull market anytime soon makes no sense to me.
Yeah, I guess one of the principal questions, Steph, is whether you think that enough froth has come out of the market, or if some of the areas that he mentioned, even the FANGs or mega caps, which, he's done the covered call strategy against his own holdings as a hedge, still have valuation resets that, are going to be tough to handle, but need to still happen.
Yeah, no, I think there's definitely parts of the market that still are seeing froth, and higher interest rates are not good for growth assets. They're not good for long duration assets. We've talked about this pretty much all last year. And so, yeah, maybe as a result, the markets can't go to new highs, but I don't necessarily think that the market has to fall tremendously from here. I know we have these unknowns. I know people thinking about recession. I'm kind of like 50-50, soft landing and recession. But at the end of the day, Scott, I mean, there are areas in the markets that are actually holding up pretty well. And it's not just energy and financials, it's industrials, it's materials, parts of discretionary as well. So I know tech gets all the attention because it's 30% of the S&P 500, along with comm services. It's about 34%. That's a big chunk. I get it. But there are a lot of other parts of the market and sectors that actually should benefit as rates continue to either work higher or stay higher for longer. It certainly seems like they're going to stay higher for longer after the Fed speak earlier this week and even today.
Hey, Steph, quick, because I got to bounce. But you sold Accenture and Fortinet to buy more Lam Research.
Yeah, this is trying to kind of get consistent with what I've said. High multiple stocks struggle with higher interest rates. Accenture and Fortinet are very high multiple stocks. Lam is down 50% from its high, trades at 13 times. And I think maybe I'm early by a quarter or two in terms of trough NAND and DRAM spend, but I like the risk reward here.